second installment of the Everyday Pro Investor video series. So Evan and I wanted to cover the week of 4/13 here. The first week since our last video, talk a little bit about what happened in the market and what we're kind of looking for here over the next week or two. So last week in the market, we were looking for a potential pullback. We were talking about the 50% retracement level, and we were like, all right, if we get above that, I think we're solidly above having to go back and retest the lows. But if we don't, then we're gonna go back down, and hopefully we find some resistance around the 2,500, 2,550 level on the S&P. Well, we clearly broke through that. We were up 3% on the week. We closed up almost at 2,900. Really a solid week for the markets. We did have some hedges on. Really didn't make any money on those. We sold some of our hedge early on when they were profitable and let the rest expire worthless. They served their purpose, but they really were. We were hoping to make a little bit of money on those. We're really looking for the pullback, so we've got cash we want to put to work.
Yeah, with that being said too, you mentioned the strong finish above that level, and now it's kind of starting to look like we're in the same spot we were in the end of Q4, where you have companies trading at high multiples, companies like Wingstop, companies that we like, but there's really no reason for them to be trading at the levels that they're trading. So getting kind of concerning there. It almost looks like it's setting up for another crash. I don't know, what are your thoughts there, Brian?
Yeah, I completely agree. You got Wingstop, Shopify, Tesla even. So, Wingstop, I believe it put in a new all-time high on Friday. It closed around 106, 107. It hit lows of about $44 at one point. And, it's up like 115% since those lows, which was just a few weeks ago. And I think it's a little bit crazy to think that a name like Wingstop, which we really like, it's a high growth, high beta name, but they're really not earning that much money because they're in growth mode. Why would this stock be outperforming? Why would it be hitting new all-time highs in this environment? Even though they're mostly takeout, they're not going to perform extremely well in this environment still. You heard McDonald's a couple weeks ago come out, their same-store sales were down 20% or something of that nature. Wingstop's going to face the same exact problem. I think they're going to get through this, and when we come out the other side, absolutely, they're going to be an outperformer, but we're not out the other side yet. I think it's just too early. Shopify's another one. They're an online platform. They're doing great things, but they work with small businesses. A lot of small businesses are hurting. They allow that, e-commerce platform for small business. E-commerce is doing great. Look at Amazon, obviously. Look at Walmart. But the problem becomes that those are small businesses. A lot of them were sourcing from China. They couldn't get supplies. A lot of them don't have the cash to survive what's going on right now. They're going to get the small business loans through the payroll protection plan, but it's very concerning, and Shopify's earnings are going to get hurt. Their growth plan is going to slow. Why is Shopify back at an all-time high? Doesn't make sense. Are Wingstop and Shopify putting in double tops right now and setting up for a big pullback? It's definitely possible. What are your thoughts, Evan?
Yeah, I think that's what we need to start looking for. Company like Wingstop, we own positions on Wingstop. So what I did there at the end of last week on Friday, when it was getting pretty overbought, I went ahead and just sold all my positions. I didn't try and hedge against it. It's just kind of one of those things where a name like that, I've already made 30% in the stock. Go ahead and sell it like the company, and if it does crash, or if it does, I shouldn't use the term crash because that's a little scary, but if it does pull back quite a bit like it should, then I could look to re-enter a name like Wingstop. I think that might be the same for a couple other stocks that we hold. I don't know your thoughts on actually selling the stocks in our portfolio, Brian. We just make hedges, but it seems like in this environment, it might make sense to take profits on names that are trading well above where they should be.
Yeah, I definitely agree with that. There's certain names, like let's say a Pfizer or a Johnson & Johnson, where I don't want to sell that position, even though they've had some pretty good runs off their lows. We're up pretty big on some of those names. Wingstop's one, though, I think you're right, because it's almost an assured thing that you're going to get a pullback at some point. You're going to get a better entry point, in my opinion. You talked about you made about 30% on your stock. the Everyday Pro Investor portfolio, we had a buy right on from a month and a half ago or so in Wingstop, where we purchased the stock around somewhere in the 80-85 range, and we sold the April 95 call against it. Those expired, and the stock got called away. We ended up netting 12-15% on that trade. Good trade. We got a dividend on top of it, so it really even netted higher than just the price appreciation. And I think a name like Wingstop, absolutely. I think it's time to get out. If you own Shopify, it's time to get out. You're going to get a pullback. You're going to get another entry point. And it's scary to think about owning those names going into earnings. Both of those names report earnings in 2 to 3 weeks. I don't want to own those names until I hear the earnings reports. I think the earnings will trigger a sell-off, and then once you sell off, I think that's when you can get in. Do I want to own Wingstop back at 90, at 85, somewhere in there? Absolutely. Do I want to own it at an all-time high in this environment? Absolutely not. And I think that, you talk about Wingstop's overbought, Shopify's overbought. They're you look at the overall market on a 1 month, the S&P 500, if you look at the SPY, the ETF that tracks it, you're looking at an overbought condition there. Now, I know I like to look at, because I'm more of a long-term investor, the 2-year chart. I throw on the 50 and the 200-day moving averages. I like to look at that type of stuff. The MACD, the RSI, not quite overbought yet, but you're getting there, getting close. You're looking for the MACD to roll over. You're looking at the 10-day RSI to eventually here be overbought, honestly, within a couple days or two potentially. And then also I look at it, we did close, I believe, just above the 50-day moving average. That's a good thing. We've tested it, we got through it, but you need confirmation, which means you need 3 or 4 trading days above that range, preferably to continue moving higher. I don't think you're going to get that. I think you're going to start to get a rollover. We've got some earnings this week. You've got IBM that's reporting. Really not that big a name, but this is an environment that's going to be interesting to see how IBM handles. A lot of big institutions don't own it, but you've got names like Coke, Lockheed Martin, Texas Instrument, Netflix reports. I think you're going to see good numbers out of them. I mean, that's a great stay-at-home play, and that's a stock that absolutely makes sense to be outperforming. A couple of names in our portfolio, Blackstone and Verizon, are reporting. I think Verizon's going to report a good strong number. If they sell off, I'm absolutely going to add to that position if I can get it down around 50. Blackstone, I'm absolutely looking for a pullback here. I think that when it pulls back, you're going to get a good buying opportunity, probably somewhere in the mid to high 30s. I think they're going to report a rough number. They unfortunately had to close on a deal last week that they initiated before the sell-off, and it was in an energy company. Obviously, oil's been plummeting. They paid $20-some a share for this company. It's probably worth half of that right now. So I think that earnings could trigger some sell-offs. Name-specific and market overall could pull back, and I want to start putting a little bit more money to work once that happens. So Evan, I know you talked about you sold a lot of names. Did you add any names this week?
It brings up a good point that I want to make too, especially in this environment. I'm relying more and more on technicals than I am fundamentals because things are just all over the place. It's really hard to buy on fundamentals right now when you don't know what you don't know. And what I mean by that is we don't know what the state of these companies are really truly going to look like after the impact of this quarantine, this shutdown, the coronavirus. So I've begun to trade mainly on technicals, and a good example of what I mean is last week, Thursday, the oil is not a name you want to be in right now, right? It's becoming very cheap. The price of oil per barrel is dropping, but at the same time, you have a fund like XLE put in an amazing buy signal, a perfect Class A reversal on the 1 month. So on Thursday, I went ahead and bought super short dated calls, expecting a pop literally overnight. And Friday it opened up and got to, I think it was up around 5%, and I made a quick 45% on an options. Like, that's a perfect example of where I'm trading a company purely on technicals. I would never want to own XLE at this point, but it provided a really good trading opportunity.
Yeah, that's a really good point there. I mean, like you said, you don't want to be in any energy names right now, and yet you were able to make 35-40% basically in one day by trading options on something you saw, technical basis. You really can't go, like you said, off fundamentals right now because what are earnings? You don't know what earnings are for these companies. So I think that you're right. You use the technicals to trade it, And the real key is if, like, we talk about a Pfizer, Johnson and Johnson, those are names that we like, we want to own long term, and AbbVie, even like a PepsiCo, which is going to perform well in this environment. People are flocking to the snack aisles. Obviously, you've got the beverage side of things. You still really don't know what earnings are, and even once you get the earnings reports, like a PepsiCo that might be like outperforming right now as far as earnings because people are buying tons of their products. You have to normalize that for when we go back to I don't want to say normal environment, but when you go back to almost normal everyday life, right? I mean, eventually people will go back to eating out. It's going to be different, but they're going to go back to it. PepsiCo's earnings are going to change at that point. They could end up getting some really tough comps for this time of year next year, which is going to put a long-term strain on the stock. So while the stock might be able to get up to, let's say, 150 or 60 in the short term because their earnings look amazing, when you actually normalize them, let's say over a 10-year period, your PE's gotta make sense, and it's eventually not going to make sense here. So I think that it works both ways, right? On names that are losing earnings and names that are gaining earnings based on this current environment. I would say that kind of, I don't know, wraps up what I'm looking to talk about this week. But what are you looking for next week, Evan?
Yeah, so I'm mainly looking at the SPY. And again, leveraging those technicals. Right now it's looking like it's trading way too high. The market's just ripping in this environment. So actually for next week, at the end of the day on Friday, I went ahead and bought a put on the market. So basically for next week, I'm looking for the market to either open down or open flat and then trade down throughout at least the first half of the week. I would be pretty surprised to see the market continue up, given the situation.
I agree with that. That's actually, I bought a put as well on Friday, just to hedge my portfolio, my personal portfolio a little bit. Honestly, want to see how we open Monday. Might throw another hedge on the Everyday Pro Investor portfolio. I think that, I look at the technicals, again, like we keep talking about, 2,900 roughly, there was a gap down in the S&P. So I look at the SPY at 290-ish, 290.50. There was a gap down. Now you got to try to backfill that gap. I think you're going to get some resistance there. You're going to get the negative earnings. And I think that is exactly why I want to have some protection going into this week. Even, last week, looking at a company like Alaskan Air, you wanted to take a flyer on an airline, you do a buy rate against it. I did that in my personal. I bought Alaska Air. I sold a call against it. And then I actually bought a put that's pretty far out of the money. So I used a little bit of that premium I brought in order to buy a put for protection because I think short term it might actually pull back. Long term, I think they're an airline that survives. It gets to $40. It's a name that I might even look to add on a pullback to the Everyday Pro Investor portfolio. But it is a high risk name. So I like using, you can sell calls right now, and basically, depending on what call you sell, you can get 8 to 10% of that premium, or 8 to 10% of what you spend on the stock back in premium. And then, like I said, you can buy some downside protection. And I think that right now, going into earnings, really the heart of earnings season, you're going to start to see some names report just absolutely horrible numbers. They're going to pull guidance. How much of that's baked into the stock after this run up, I'm not sure.
That's a good point. That pretty much wraps it up for me. I know we're trying to keep it short and sweet for this video for this week, but that's really all I have on next week going forward.
Yeah, that's all I've got as well. So we'll wrap it up here. Thanks for watching another installment of the Everyday Pro Investor team here. Brian, myself, and Evan. This one probably won't go out on the podcast. We usually keep that to every couple weeks, but again, go ahead and subscribe, follow us. We're on Twitter, Instagram. You can find us Everyday Pro Investor. Our podcast is available on almost every platform. And let's go out. Let's have a good week, and let's have some successful trades.